Nearly there. Be hard not to watch a market today, huh? No, one day is Thursday, March 6th, 2025, and this is the week and charts. So what we talk about? Well, obviously, before we do that, I want to thank all you guys and girls for tuning in today. Appreciate you taking time out of your busy schedule to be here. Looks like we're going to start doing these at 11 Central, 12 Eastern for now. I might work on that time a little bit. Might move it to noon Central on Thursdays, just because. Well, what do they call it? The Parkinson effect. Work will expand the time will work will expand to fit the time allowed. So it never seems like I have enough time. Anyway, thank you guys and girls for attending today. Appreciate that. What are we talking about? Well, obviously, current market conditions. I have a lot to say about that, especially now. I know I say that every week. Questions on trading, your favorite stock and crypto picks. We'll get to the live charts here in just a few minutes. I think it's kind of fun, once again, to be looking at live charts. I look like kind of a little Gavin Newsom going on there today. Just ran to the bathroom, threw some water and gel in my hair, or whatever that stuff is. Anyway, I had a lot to say about the methodology in action. I have a Russian doll set up, and I actually am thinking maybe about using a little volume. I don't know. We'll see. You know me, I'm not a big fan of volume when it comes to trading, but I have some mystery charts and some reveals and all that good stuff. And I'm going to continue my series on 25 trading resolutions. The number 25, I felt like I wanted to give it a little bit more time and flesh it out a little bit more. Again, I ran out of time. So we'll do 21 through 24 today. And obviously, if you have any questions in general on trading or anything, comments, or, there's a few things I might admit today, a little admission of guilt here and there. Actually, I will admit. And, maybe you can question me on that or question the reason I did things. I have justifications for most of it, but you'll see that in a second. Anyway, there's a disclaimer screen. As you know, you can lose money trading laws off the summing up. All predictions are about the future. And a lot of stuff, between now and then. That's from my buddy Greg Morris. This is all my contact information. Again, shoot a screenshot of that if you like. You can also reach me at dave@landry.com. I answer all emails eventually. Let's talk about the mystery charts and the methodology in action. So here's the mystery chart reveal. This is BB. You can see nice little pullback to the moving average, a Landry light pullback. And this is what happened since. The entry's up here at 550. Notice that the stock continued to drop for the most part and bounce a little bit over the last day or two. But in this particular case, since it didn't trigger and it pulled all the way back to this prior little base in here, I decided to go ahead and pass. So no capital was put into harm's way. A while back, I think one of the million little things that I did was track when you don't act. And you're going to be amazed when you go back in and look at the service archives, davelandry.com/archives. And if you want to see the newer ones, as they become public, I put them. I had a client in, or I have a client in Italy, and he's been begging me forever to put them on YouTube. And my apologies for not doing that, but I recently did that. The reason you want to do that is you could translate into any language. So if English is not your native language, you can get these on YouTube and translate them. And if you're a subscriber, obviously, I'll give you those. I'll put those up for you as soon as they're published. And if you're not a subscriber, they will show up within several days to a week, depending on what's in there. Okay, another mystery chart reveal. This is KGC, a gold stock. The parameters are down below. I think it's the middle one here. And we had a Landry light pullback. The entry was up there, stop was down there, and then way up here, if you look, you'll notice that was the initial profit target. Now, in this particular case, after several days of it continuing to pull back, I decided to pass on the trade. Now it's since rallied, but that's okay. I might be going after some other gold stocks, and I figured that maybe some other gold stocks would set up in the meantime. Excuse me. But anyway, notice it did kind of pull back for a few days into this prior range, and I feel like it lost a little bit of momentum. It was trading well below the 30 EMA, so I went ahead and passed on that one. Now, this was not a mystery chart. This one triggered. I did show this one live last Thursday, and it was a bow tie to the downside. And again, if you go and look at the archives, you'll see a video on this, and this one's on YouTube also, youtube.com/Dave Landry. Anyway, you can see it rolled over. There was a bow tie to the downside. My favorite bow ties, write this down, for shorting or coming off of all-time highs. When you're trading a transitional pattern, you want ideally all-time highs because the most people are trapped on the wrong side of the market when the market begins to implode, of course. So at this particular juncture here, at this high, except for the guy who bought the last tick, everyone who's ever owned this stock is happy, okay? Now, remember, technical analysis doesn't have to be that technical, and it doesn't have to be all this mumbo jumbo and all this other thing, all these other things, and all the buzzwords. Now, ooh, AI, we're using AI now. It's like, oh yeah, whatever. I want to make the universal sign for it. Well, better not. But when you boil it all down, you're just looking at the trading that occurred, okay? And there are people behind the bars. And you think from a psychological perspective, what's going through their heads or what's likely going through their heads. Obviously, you don't know, and all predictions about the future, a lot of shit can happen between now and then, as I say every day. I'm borrowing a line again from Greg Morris. But it does give you a framework to work around and some sort of, there's not a whole lot of logic in markets, but there is a little logic, and look at the psychology of the players. So anybody who bought in this big fat range, okay, once you drop below the range is a hurt and pop. Now, here's the thing. Most people, let's say you're in a trade and it drops, okay, and let's say you're not following proper money management. You're just an average Joe that bought a stock and because you liked it or for whatever reason. Once it begins to drop, you become the mindset, hey, you know, if this thing, your mindset becomes, I should say, hey, if this thing gets back to break even, I'm getting out. And I see it happen all the time from non-trader types, okay? So what happens is when that stock doesn't get back to break even and begins to tumble, they're faced with a tougher and tougher decision. Do they just keep hanging on, hoping to get back to break even, or do they bail? Is the psychological damage enough to force them to bail out? And the other thing is they might need money. You don't know their situation or whatever. And in the needing money thing, that's kind of dovetails in what Tom McClellan's mother said a while back, a long time ago. Anyway, some people buy, paraphrasing, some people buy, everybody uses timing. Some people buy when they have money. Some people sell when they need money, and others use far more sophisticated methods. So if the stock continues to drop, they might need money and be forced out. So anyway, long story, endless. I like transitional patterns on the short side coming up all-time highs. So you can see the bow ties were in uptrend, proper order. That means the 10 is greater than 20 and the 20 is greater than 30. 10 is simple, 20 is exponential, 30 is exponential. I know I hate to say this over and over again, but as soon as I don't, I'm going to get emails. Hey, Dave, what are those bow tie moving averages? Anyway, so bow tie happens, kind of looks like a bow tie, right? Where the moving averages come together and spread out, going from uptrend proper order to downtrend proper order fairly quickly. My wife was eating some spaghetti, and as I passed through the house, I'm like, oh, you're not going to eat that sausage? I'll take it. So now I'm drinking water here. Anyway, the stop was up there. The entry was down here, and the initial profit target was way down here. And again, you can review these archives on dailylandry.com or my YouTube channel, dailylandry.com/archives or YouTube, youtube.com/Dave Landry. But anyway, went from uptrend proper order to downtrend proper order fairly quickly. Now, this little indicator I have on the bottom, or as I also like to call them, illustrator, just shows you whether or not you're in uptrend proper order and or downtrend or not. So here you can see the 10 is obviously well above the 20 and the 20 is above the 30. So as long as that happens, this is going to continue to count magnitude. This is in stock charts. There's a plug in there. It is free right now. I keep threatening to charge for it, and I never got around to doing that. But I might actually flip the switch on that and charge for it. So if you want it, I shouldn't be saying this. Go ahead and get it now. And tell stock charts thank you for letting me have that for free. Drop them a line. Anyway, when it goes from uptrend to downtrend fairly quickly, it suggests that the tides have changed, so to speak. Everything was pretty bullish just a few weeks ago, okay? And then now we flip back over to bearish. And also, my Kunesh just slipped out. I said bearish. I hope I'm not going to be saying bearish too often, but futures are down 101, almost 102, so I might be saying that quite a bit. Anyway, so we flipped over to downtrend proper order, and then to complete the setup, you need a higher high and higher low, ideally. Every now and then you get a wide range bar down, like right here, and you'll just make a higher low, okay? Now, the entry again, 23.25. Let me show you what happened and how I played it. Now, I worked to follow the system, at least in my what I call my model account, which is real money, by the way, as closely as possible. I have the 100K hypothetical model, but I also take the actual trades just so I'm practicing what I preach, and I will take them across multiple accounts. In this particular case, it had what I call an entry nick, okay? So you come in and you're like, okay, I know I need a short Carnival today, but let me just see what happens. It's like, oh, I got a trigger, and by the time I'm getting my orders ready to go, I noticed that it already began to rally. So I said, okay, two things. One, I do apply a little discretion even when I'm trying to keep it as mechanical as possible in this model account. And a little discretion would be, especially like on the long side, if you have an entry nick, okay, where it just kind of barely hits that entry. In this case, it was 2 cents on the short side, obviously. But if it barely hits the entry and then comes back in, then you have a decision to make, like, okay, do I still want to go with this? Do I want to put in a little bit higher entry above that intraday high, which is a good thing to do, and wait for a re-entry, so to speak. But in this particular case, I said, okay, well, let me just take a look at the options. And when you're shorting, and I know I'm opening up a can of worms here, okay, because options are incredibly complex. But when you're shorting, I would always recommend you go in and look at what the options are. And one thing I'm a big fan of is deep in the money options as a substitution for stock. So in this particular case, I'm like, okay, well, their February puts look like they're pretty cheap. 23, that's half a point below the market, or 25 cents below the market, I think, at the time. And I'm like, you know, that's okay. I think for 11 cents an option, which would be $11 total per contract, it might be worth a shot. And I have all day today being last Thursday, and Friday for this thing to move enough to make it worthwhile. Now, in a case like this, I'll use a 2 times flip out. And later in the day, it was actually down to like 2 cents. And I did do a little bad behavior here, which I would admit to. But I actually thought for a second, it's like, boy, at 2 cents, just for shits and giggles, what if I buy 10 options, I don't know, 20 bucks or 20 options at 2, 40 bucks, and then flip them out at 4 to pay for my position. You got to be really careful when you start doing that. You can't get a little bit pregnant, and I've been guilty of that S&G type of trading quite a bit, but just be super careful when you do that. As I've said before, because I already sort of, in this particular case, I already sort of violated some rules, which I'll explain to you in a second. But since I already kind of violated some rules, it's like I didn't want to exacerbate the situation and make things even worse. So I decided on passing on that behavior. The point I was going to make is, if you are going to do that S&G kind of trading, make sure it's so small, and also infrequent, but make sure it's so small to where if you lose in the trade, like in that case, let's say I'd bought 20 contracts, so that's $40 plus commissions would probably add up a little. Let's say at least 50 bucks. Then if I lose those 50 bucks, it's not going to change my lifestyle. We'll have pizza instead of steak on Friday nights, which my wife likes just as much. Anyway, so I decided not to do that extra S&G trades, but I did open up another 6 contracts at 6 cents. That was a little bit later in the day. I'm not sure exactly why I did that. I know early on when I opened this trade, and this is what might have led to the bad behavior, is I was only, and I'm just trying to figure out psychologically. I didn't take really good notes on this particular one, but another shame there. But I was supposed to have 5 contracts on this, and then after I bought them, I got to thinking, well, that's an odd number. Okay, if I'm going to flip out half at some point, I need 6. So I bought that extra contract, and then the other 6 contracts at 6 cents, $36, was the kind of S&G kind of bad behavior type of trade. I know it's like, David, that scaling down. It's like, yeah, it's scaling in, or whatever you want to call that, averaging down. And so that's kind of some bad behavior there. But I think I kept it to less than $100, and that was kind of the ultimate goal, is say, okay, if I'm going to go in and short this, I'm going to spend $2,000 potentially, or risk $2,000 potentially, or possibly a lot more on the short side, so I can buy these options pretty cheap. It will get me in the stock for 2 days. Okay, if the stock implodes, I've beat the system, so to speak. If it doesn't, then I can reevaluate the situation, and I'm only out about $100. Now, what's interesting, so what happened was, so those were the 23s, okay, and obviously they expired worthless. Now, going into Monday, and here's the thing you got to think about when you trading is making decisions and living with them. Life is making decisions and living with them. Deciding to eat a piece of sausage 5 minutes before I go live has me drinking a lot of water, which I don't want to do during my presentation. But I said, okay, well, applying a little discretion to this, the fact that it didn't officially, it triggered officially, but it wasn't like a well trigger. Okay, it was only 2 cents. I said, okay, I'm going to live with the fact that Monday morning this thing might implode and I don't have a position. And I'll reevaluate it then. Now, fortunately, I was able to come in and reevaluate the situation. And when the market began to sell off a little bit, I went ahead and put on some deep in the money puts, okay, to give me a delta of 100. So it acts like 100 shares per contract. And I bought those at 214, okay? Now, again, I'm not sure why I bought 7. I should have only bought 6, but I bought 7. And so 7 contracts. Now, they're only a week out, or actually 4 days out, but I figured that the extrinsic value or cost, I should say, wasn't that much compared to where it was in the money. So you were a couple of points in the money, okay, at the time. And I'm like, all right, well, that's not a huge difference, okay, how much extrinsic I have to pay on top of that. So I figured it might be worth a shot. So fortunately, the next day, I was able to flip out 3 of those puts at 385. Now, my goal was to flip out half, okay, at a double, and I had a resting order in place at 428, which would have triggered later in the day, but I got to thinking that, am I splitting hairs with this? So I started bumping that ass down until I finally got filled. And my reasoning is, okay, let me get the lion's share of the money back to pay for that option position. If it makes double, then it's 100%, right? But maybe I could pay for 85 or 90% of that options position by scaling out, okay? And then the real money is going to be in the second loaf. And where are we now? We're down another point, so that's good. So that's beginning to work. So I've got 4 left, so that's an extra $400. You know, knock on wood. Come in. I need some new jokes. Anyway, so that's the trade. Now, the original trade, I lost $101. Technically, I should have only lost about $50 on that. And I think at $50, and let me know if you disagree whether this is bad behavior or not, but I think at $50, for me to maintain a position for nearly 2 full days versus a $2,000 capital outlay plus, because remember, short side, let's say something happens tomorrow, and I'm thinking of morbid things. I need to think of something less morbid. Think of something happens to another cruise liner, right? that stock could easily skyrocket. But I ended up losing $101 in the first trade, which a little bit of guilt there. Should have only lost about 50. And then the initial outlay on those 7 contracts on Monday was $14.98. Okay. Now I did sell off 3, okay, at 385. So out of that 14.98, like I said a second ago, I made back, I guess, about 85 or 80% of that at 11.55. And then you take out the 642 that I paid for them. So that's $513 in profits. Now, adding in that money I lost last week, plus the cost of the options, and then we take out the profits, the worst case scenario would be a $444 loss. And what I probably should do is, and I don't claim to be an options guru, but what I probably should do is, as it continues to drop, maybe I should scale out or roll down, not scale out, but maybe I should roll down those options. And so I'll evaluate that later today and report back. Okay. Your delta was way more than your theta. So yes, it was a good move. All right. There you go. What is theta? Time decay? Delta, theta. I know what gamma is. Theta's time decay, right? Can you explain that to me, Brian? So my delta was way more than your theta. Let me think about that. What's extrinsic value? Is that theta? Okay. All right. He answered yes. So is yes theta or is yes, what is it? Extrinsic. Okay. Well, wait a minute. Theta is the cost of time. Okay, that's interesting. So probably need to talk to you a little bit about that. Options are so complex, and one reason I'm always hesitant to talk about options is if you know options, you probably shake your head like this idiot, you know. And if you don't know options, you're like, what is this idiot talking about? So it's an interesting thing. How do you gauge the cost of time though? And how does delta work into that? Okay, but I felt like maybe we're coming to the same point when you're coming through it through math and I'm coming through it a little bit more by feeling. I'm kind of like, okay, how much am I paying extrinsic, okay, which I guess is extrinsic, which is the money above what the option is actually worth. So if you're 2 points in the money and you're paying an extra 14 cents, you're paying 14 cents for the insurance, so to speak, to hold those options, to hold a position, so to speak, as opposed to have an outright position where you could lose a hell of a lot more money. Anyway, intrinsic is the real money portion of the position. Yes, and extrinsic is the part that is what I call the fluff off, the fluff you're paying. So how do you measure theta? So is theta the same as the extrinsic? Okay. Yeah, I'm gonna have to, if you don't mind, Brian, if we could talk offline, maybe I could, maybe you could educate me on that, and I'll do some Googling on theta. But yeah, options get really quick, really complicated really quick. And the other thing too, it's like, okay, well, Dave, you need to use the option model. Well, I knew someone years ago who created an options model, and he ended up selling it, and he's later regretted it because he sold it under the guise that, don't kill the market with this, and they killed the market. And his thinking is he made $1 billion mistake in doing that. Anyway, that's a little ancillary story. It means nothing. That's a little superfluous. What's that word? But anyway, the thing is, the point I was trying to get to is everybody has the same option model, okay? So I'm not sure that you have an advantage over the other, but if you feel like your stock picking is pretty good and you feel like it can make a move and you feel like it's worth paying that extrinsic or that fluff on the option, especially when you compare it to your outright potential risk, then it's worthwhile. It gets really complicated really fast. Okay, what happens if this market has a mother all bounces before I take some other action later today, possibly? Okay, and then that money evaporates, and then Friday the damn thing tanks, or Friday, after hours it tanks, right? And then I'm like, well, I have no position once again. So it gets really complicated really fast. Tread lightly if you're going to do this, but I would always encourage you to look at the deep in the money options as a substitution for stock. So to me, that's kind of an easy way to wrap your head around it. And I don't know the exact math on this one, how it worked out. I should have written down stock price and all the time. I might have in my trading journal. I'll look back to it next week. But let's say the option is 2 points in the money and they only want $2.14, which, if memory serves, that's what it was at the time. I'm like, you know what? 14 cents is not a lot to pay for that insurance of being able to sleep at night. Yeah, it's going to suck if I lose $1,400 and a little bit more because I did it in other accounts too, but at least I'll be able to sleep. Okay. Extrinsic is a funny money portion, largely consistent of theta and implied volatility. Okay, so theta, yeah. Okay, so I see what you're saying. So theta is the amount of time, okay, and the implied volatility is what the market is implying the option should be at. Like lately, I have a little strategy which I haven't completely fleshed out, but I do notice late in the day, and I talked to an S&P trader a while back, and he sort of confirmed what I was thinking. These ETFs get an imbalance in their amount of futures or amount of long or short options, or however they futures contracts, or however they play the equivalents in the S&P. So you got like the spiders, or maybe these leverage funds or whatever, especially these leverage funds, I should say. I've noticed like late in the day, I call it the race to the finish, a lot of these contracts will have these big moves. And it was explained to me that you get an imbalance. Now, I don't know, there's no way of knowing who's got an imbalance, but if you're a short ETF and you don't have enough futures, even if the futures are down, whatever they were earlier, 101, okay, going into the close, you have to short even more. And he explained to me, that's why his futures be creamed, and they get creamed even more during those last 5 minutes, because they're forced to do those transactions. But where I was going with that was lately the implieds have been so high on the E-mini options, it's not worthwhile. All right, one thing I've kind of been toying a little bit with is paying attention to the volume buzz on stocks. And I get this from TC, and a while back, someone who, I don't know if he's legit or not, so I don't want to say his name, but we crossed paths somehow, and we were talking on the phone, and he was bragging about how much money he made pre-market off of volume buzz and whatever. And I think he was using them. I don't have the software. It's a free website. I shouldn't tease you with it, but that's where he finds the stocks or whatever. And I think he uses TC for the volume buzz. So that kind of intrigued my interest into this, but I'm not admitting that I'm in the volume just yet. My problem with volume is I could take either side of the coin when it comes to volume, and you're not sure whether or not you're getting true volume. And volume makes a lot of sense if you say, okay, heavy volume stocks going up, that's a good thing. But wouldn't it mean that a lot of people are also selling? And that's kind of like the Dick Orm's ease of movement. He's no longer with us, so God rest his soul, but super nice guy, by the way. But anyway, so that kind of turns everything on its head. But I have noticed that the volume buzz is kind of cool to watch, and I've been watching it in the Landry 100. So I put out this post in Facebook, and I think while I was making the post, I actually got triggered into this. Now, Russian doll, just FYI, what you're doing is you've got to pull back like this or something. And this is so crazy, I don't think I would trade this outright, okay? Because it's just so damn crazy. HV of 157. Even ludicrous would say that's ludicrous, right? That's really high. S&P right now, I'm guessing it's probably 15, 16. We'll take a look at that in a second. I'll tell you exactly. But anyway, your job is to try to get in on this pullback intraday. It's almost like you're front running the daily setup, but you're just doing it for an intraday trade. Now, I remember looking at this, and I don't know how this volume buzz is calculated, but it seems to me like it was much more than 120 Oh, wait, 191%. Okay, I'm pointing the wrong one. That's why. So you got about 200%, which I'm guessing is twice the normal volume on this, and it's beginning to rally, and the market's oversold. It's kind of like the ball being pushed underwater, right? There's a chance for it to pop back up. Now, we're not betting the farm, okay, number one. And number two, we're not trying to establish a position trade, although it can be possibly a way to get a little bit of a head start on a position trade. I'm not sure I would go in if you were going in at, I don't know how many shares you do on this, but let's say 1,000, whatever. I don't think I'd buy a whole 1,000 shares, which probably would be too much for the stock. But anyway, I wouldn't buy that all at once if you're doing some sort of Russian doll with the attempt of turning it into a longer term trade. But in this particular case, I'm like, you know what? And I think if you look at that post that I made on Facebook, you'll see. That's in the Facebook group, by the way. You do have to be at least a gold member of DaveLandry.com. And I think it's well worth it. I spent a lot of time in there talking about markets. Not that I'm the grand poobah or anything, but I've got a lot of good people in there, a lot of smart people that I get a lot of trade ideas from, one of which I'll show you in just one second. Okay, buckwheat. So here's the trades I made on that. I only did 200 shares. I just did this in a very small way. So the buy was there when it began to rally. And then what happened was the trailing stop I was using knocked me out. Now remember, I hit a buy and I got an alert that I hit the IPT and I already had a trailing stop in there. I think it was a 1.5 point trailing stop. And I just let it go. And toward the end of the day, I'm like, or an hour or two later when I check back on it, I'm like, holy crap, I probably got 5 or 6 points in this thing. And unfortunately, I'd gotten stopped out. So evidently it must have spiked and came right back in. So like I said, I'm not sure exactly how that went down. I should know. So I said shame on that. Another one, admission of guilt there, exactly how I got stopped out and why. But overall, I ended up making $226. So it's better than a poke in the eye. And as you can see, if I would have paid a little bit better attention to what's happening, I probably would have made a heck of a lot more before it eventually stopped out. But sometimes these little Russian doll type of trades, where I call it a Russian doll because you look at a pattern inside of a pattern, okay? So you've got the bigger picture daily pattern working for you, and maybe even a weekly pattern working for you, and then you're going in on an intraday pattern. And part of the inspiration in that was years ago, I worked with, I was helping him pick stocks, but I worked with a trader, and he would get everything behind him, daily, weekly, etc. And he'd go and he'd take, I wouldn't say a scalp, but a little bit more than a scalp in the market, an intraday trade. So he had as much behind him as possible. So that's kind of the Russian doll setup, and you are kind of front running that other setup. Anyway, I had a buy at B setup I want to follow up on. I'd forgotten to follow up on this one last week. So this is one that we have been talking about, and I don't have the slide here, but John Ross is our resident IPO expert. He's taken my stuff and done really well with it. I'm kind of blown away, and I love when people do that. Used to, like I said one time, somebody took my stuff and was trading low price stocks when the market was blowing and going. This was probably 20 years ago, and I was speaking right around that time in New Orleans, and I told the group that it felt like somebody stole my bicycle off the front porch and rode around the block, and when they got in front of my house, they popped the wheelie. Anyway, but good for them, and good for John for making this work, and he brought this up in the group. Now, remember, we have the day one rule, which states that if day one makes the high for the week, okay, then it must also close above that high. So normally with the buy at B, you would just be buying a new closing high. And by the way, less than $5, I'm pretty skeptical with IPOs when it comes to buying them, with the buy at B at least. And then more than $30, which used to be the 20, in case you've been around forever, $20 rule, now it's a $30 rule, I tend to pass on them with the buy at B. It's my, through empirical observations, it seems like that those numbers, less than 5 or more than 30, the buy at B doesn't work as well. But anyway, here we have an NCH, which is a new closing high. Okay. So technically, or I should say, if day one, if let's say day two was higher than day one, like this, I don't know how it's gonna look on the camera. Then this is the day two high, this is the day one high, okay? Then you no longer have to worry about that day one rule. But in this particular case, since day one set the high for the week, it has to also close above that high. So the buy was right there. Now, I didn't buy it on that day because the trigger, so to speak, was kind of marginal. It was barely above that prior high. But technically, because of the day one rule, you just need to close any even a cent above this high, okay, as opposed to normally you would buy it at the new closing high, okay. So I went in on the next day and I bought 400 shares, okay, in this particular account at least. And my stop was down there at a 2-point initial profit target. And when that IPT was hit, I sold half. Okay, so I had 2 points IPT, 2 point stop. Initial profit target is only half. We're selling, right? And then you bring the rest of that up to break even when that happens. So you can see 829, 400 shares, 1029, 200 shares taken off. Okay. So let's get this one out of here. All right, sorry about that. That's from last week. Okay, now, any questions on any of that so far? You'll probably see fewer and fewer of those setups because the market is questionable at best, down 108. So here's another post. I'm back in IPUSD. It's one of the shitcoins, SHYT. And as I said last week, this is my shitcoin to Bitcoin strategy where I take, as opposed to plugging a miner in and have it a computer miner in and have it lose money, I'm going to trade shitcoins and take a crumb off of each trade that works, obviously, and put it into Bitcoin. So $25 ended up in Bitcoin. The entry was here in these crypto pairs. I just use a 20% initial profit target. Obviously, something like Bitcoin, 20% would be kind of crazy, but these little shit coins can move really fast, really quickly. So $25 was mined, so to speak, to Bitcoin. And I hate to use the word hope, but hopefully this will be a good problem to have. Hopefully at some point, that amount of Bitcoin that can be made from these shitcoin trades could be something that's worthwhile. And I might have gotten to thinking about this. I know that some of the shitcoin mining, or what's the other thing, proof of stake or whatever, I forget. Well, it wouldn't be proof of stake, but I think the shitcoin mining, I think most of those guys, they don't want to get paid in those shitcoins. They want to get paid in Bitcoin. And I think they ended up getting, I think that's how that works out. Maybe that's where I got the idea. I don't know. And one thing I did try initially was I did try keeping money in those native pairs. Okay, so in this particular case, I would keep what was much more at the time. Let's say I keep $50 worth of IP just in case it went up 1,000% or whatever. But I found out that just was kind of a Chinese water torture because a lot of these things just roll over and go to zero. You'll see that when we get the live charts in just 1 second. Anyway, I decided to get out the rest. I did ride out this first little correction in here, okay? And remember, we're at least break even, okay? And I felt like I wanted to get something out of the trade, and I rode out the correction, and when it began to implode a little bit again, I went ahead, just cleaned house. Everything was kind of ugly then, it's kind of like a baby being thrown out with the bathwater type of market in stocks and everywhere else. Anyway, so I only put $1,000 in this. I would keep it small on these shitcoin trades and all because it's such a volatile, such a crazy thing to trade. And I'm also trying to be cool and like I'm trying to parlay some small accounts here and see what happens. But anyway, so I made 89 on the second loaf, and I took 25 out of that too, which is not shown, and I put it into Bitcoin. All right, any questions on all that? Okay. So I promise not to bore you too much with all this. Those are the rules for the TFM 10% system. And that was the last buy back there. You see the last sell was right here. Just look at these rules and that'll explain it to you. And this zone here, these zones are based on the 50-week closing high. So now, especially with this morning's weakness, we're pushing further and further into that greater than 5% zone. Jeff, who's here today, actually inspired me to put these zones in here. And his thinking is, my thinking was if a market drops 10% or more from its 50-week closing high, it could be in a lot of trouble. So that would be 5503 right now, S&Ps, round numbers. And his point is, if you're 5% or more away, then the market could be in trouble, and he likes to at least think about getting out. So the sell would be, based on the rules, a close below the 50-week moving average and 10% or more away from the 50-week closing high. Actually, the sell right here should be down here. So this is a mistake. So this sell here, my bad, should be at 5,500. So the sell in the P's would be 10%. It's it depends on how you want to look at it. Close below both the 50-week closing high and the 50-week moving average, or the greater of the two, whatever makes more sense to you. So that's wrong right there. So the sell is actually right here. Okay. When I updated the chart, it must have moved higher. So my apologies. Now, the NASDAQ, as I said quite a bit, just for shits and giggles, I bought 100 shares way back on the last trigger in April of 2023. And somebody posted earlier, or yesterday, I guess, in the Facebook group that the NASDAQ's like 100 weeks or something, or forget how many weeks above the 250-day moving average or something like that. And I went in and looked at this 50-week moving average, and you can see it's been above it for a long, long, long time. And I've been in this trade for 101 weeks, which when I went into it, I just thought, hey, we're getting a little rally off the lows. Let's see what happens. And I had no idea it would go that far. So again, the sell's at the wrong spot. The sell's actually down here at 55.03. A few weeks back, you can see they were both the same, okay, the 50-week and the 10%. But now that 50-week moving average is climbing up. The reason I added that moving average, by the way, is that I wanted a whipsaw filter. Now, if you start adding more and more and more and more and more and more whipsaw filters, you do something called curve fitting, okay? And you make a beautiful system in hindsight that's going to suck in foresight. Like, as I said before, I told somebody who designed systems that, well, your biggest drawdown is always in front of you. And he got mad at me. I'm more like, he's going to find out, FAFO? That's what the young folks are saying. So there's the 50. You got to close below the 50 and 10%. So we do have a ways to go on this. I thought we were much closer to a sell signal. Oh, hang on. Okay, I see where I fudged up. This is supposed to be the Qs, okay? That's why it looks funny. This is supposed to be the Qs. I'll bring up the live chart here in just 1 second. I'll get it loaded in background. My apologies. In fact, we can do that real quick. We got time. All right, I'll show you what happened. So now it's starting to make sense, okay? So if I go to stock charts in the ACP and I'll load up my zones, and let's bring this over here. Nope. Okay, let me show you real quick. Okay, here we go. Nope. Okay, so this is where I messed up. Okay, remember I just said that I had thought the sell and the moving average, the 10% sell zone and the moving average were the same, and they are. You can see we're right around 484, okay? Now, one thing that I put out there for discussion, and feel free to discuss it if you're on YouTube or watching this video on YouTube, is when I designed the system, I didn't know or think about the fact that Stock Charts uses a calendar chart for their weekly charts. It's kind of an old school way of doing things. And it's not good or bad. It's just it's kind of interesting because you always have the calendar week on there. And I was just thinking a close below the 50 and the 10% line would be all you needed for a signal. But I didn't think about the chart being a calendar chart. So because it's a calendar chart, instead of like Monday to Monday, Tuesday to Tuesday, Wednesday, Wednesday, Monday, Thursday, Tuesday, Wednesday, well, Godfather there, it's actually Friday to Friday, okay? So this system can only initiate a sell signal on a Friday. I don't know if that's a flaw or not, but for now, I'm going to take it on a case-by-case basis, okay? Check back often, but for now, I'm going to stick with the original system, so I'm following the original system as it was tested. But anyway, you can see we're getting fairly close to that stop out, and when that happens, or hopefully that doesn't happen, but if that were to happen, then that would be a $5,724 haircut. Now, as I've said before, there's been times where this has had $8,000 drawdowns. I think from here to here, one of these spills in here maybe was an $8,000 drawdown. And this was a huge drawdown here. It actually went negative for a second. And again, this is this should be the Qs, not the Ps. So this is the confusion. But anyway, imagine this is the Qs. That's the high. Come down to the low. In fact, we'll switch back real quick. Anyway, let me just go real quick to clean. I had a lot of stuff to clean up in post, right? So from here to here is a $5,000 plus drawdown. That's going to suck, to put it mildly. I think from here to here was an $8,000 drawdown. I'll still do okay. Don't worry about me. I'll be okay. I think overall the trade's about $15,000 if I'm stopped out, but it was up around 20. And you know, you look at the charts and you're like, oh, you kind of monetize that 20 grand. You know, like, hey, I got 20 grand on this trade. No, you don't, Danny. Anyway, hopefully that made sense. I'll have to fix it for next week. Sorry about that. Anyway, I'm not gonna spend a lot of time on Landry 100. I'm just buying stocks that are making new closing highs, okay? Not every single one. I'm looking for the higher volatility stocks first, and then I'm going down. I'll give you the formulas if you want for that. It's a pretty simple formula. It's like close minus the close 50 weeks ago, and you take the percentage of that, and one would mean it's 100% of that. And so I'm buying ones, okay, 100% of the 50-week closing high. And there's no money management used other than new ones. When new ones come in, looks like we're getting hit some more. 120 on the P's. Wow. But when I find new ones I really like, it might push out some weaker ones, okay? And if they're just weak on if they're weak on their own, they'll get knocked out too. I'll kick them out of the portfolio. As I preach each week, I'm managing this portfolio like a manager would manage employees, okay? You've got 4 employees and 3 are sitting on, or no, 3 are working their ass off and 1's sitting on his ass. It's like, well, who are you going to fire? You don't want to fire one of the 3 that are working thinking, well, they're going to burn out and stop working so hard. They might, but you don't know that, right? You probably want to get rid of the guy sitting on his butt. You don't want to keep him along thinking that maybe tomorrow he'll start working, okay? As I said, ad nauseam. Anyway, so again, all these are bought at brand new highs. These numbers are not quite as impressive as they used to be. I've taken out some ones that have gone up like 300 and 400% and then rolled back over at significantly less than that, but still a triple-digit gain. So there's only one right now, to my surprise, still a triple-digit gain. And again, they're all bought at brand new highs, and this buy was done right there. I would not advise you to do this on an individual stock basis with a small portfolio, okay? If you were, make sure you're buying quite a few stocks. I know we had a discussion a while back about how many would it really take to get a representative sample. I don't know how to do that math. I don't know if that math applies to the markets. Maybe it does, maybe it doesn't. But make sure if you are doing something like that, either the market is really blowing and going, and hint, right now it's not. We're down 117 on futures. So make sure that the market's blowing and going, or at least you're buying a bigger portfolio of these and you're actively managing them. So that move there, 176%, but you can see that was much, much more impressive not that long ago. There's no money management in this system. It's just proof of concept. And without boring you too much, if you go and watch last week's presentation, I reiterated all those bullet points that momentum begets momentum. Momentum ends badly. Boy, has it been ended badly lately. Some of these things are getting whacked, and I've just been taking them out. And what's going to eventually happen, I treat cash as an asset class with this experiment. So if I can't find enough stocks to give me 100, I'll start letting slots open up and they go to cash, so to speak. So 100 slots. In an ideal world, you want 100 stocks. Okay, I think I got 99 in this particular snapshot. But if the market continues to tank like it's doing, like after today, I'll probably have less than 99. Okay, any questions, thoughts, amusing anecdotes? All right, we'll keep going. Lately, I've been talking about 25 trading resolutions for 2025 and beyond. I'm glad I put that and beyond in there. I put that in years ago. But I think these are good little trading resolutions to carry throughout your trading career. And I realize it's February and I haven't got through my New Year's resolutions presentation, and it's March now actually. There's one more I'm going to flesh out next week, but we'll get to that in just one second. I was poking around YouTube, uploading a video, whatever, and there was I'm kind of a sucker for this clickbait kind of stuff, and there was a video about this, what do you call them, the Stoics, and Seneca and Marcus Aurelius and people like that. One thing that they said that they do is they practice negative visualization. Now, as I've said before, any motivational guru worth his weight in salt will tell you that things aren't brought about by thinking about the opposite, okay? So you want to think positive, you want to be positive. In the markets, however, sometimes you need to be a little bit more skeptical, okay? So the Stoics, according to this quote that was in this video, that's the video right there, Stoic Warrior Mind. I'll give them a shout out because that's where I found it. Today I will encounter people who are selfish, rude, and arrogant, but I will not let it disturb my peace. Every morning, take 30 seconds and remind yourself that you will face negativity today, but I will not let it control me. So this kind of dovetails a little bit into the morning pages, and lately I've been, probably because of my search history or something, I'm getting a lot of other things too for some reason. But I'm getting a lot of the Stoic type of stuff in all, and people like Groggins. He's this really fit dude, is a Navy SEAL, and he'll actually record things that people say, and he'll listen to them as he runs to encourage him, and I think that's a bit much. But anyway, getting back to all this Stoic stuff, is a lot of the stuff that's coming up is the importance of starting that morning quiet. Okay, stay analog and have these thoughts and prepare yourself, get that warrior mindset for the day. And I just think that's very important. It kind of hinted to this: every morning, take 30 seconds, right? Remind yourself. So just remember that anything can happen, okay? And that kind of reminded me of negative potential, okay? And this was left in, this is one that I thought I wanted to get into. We suffer more in imagination than reality. I find that to be true through doing those morning pages, okay? A lot of stuff you worry about doesn't come true, okay? Maybe 95% of it. The 5% that does come true is not as worse as you thought it would be, and even if it is, you deal with it, and you're like, well, I dealt with that. I was really dreading that. But anyway, the point I was going to say is negative capability is what I was thinking about. So you think about the negative capability was a reminding of this from this Stoic stuff, Okay, let me back that up a little bit. So negative visualization. So negative visualization reminded me of negative capability. Now, negative capability, I've written quite a bit about this. I haven't made a lot of it public yet, but I'm working on all these things. It kind of reminds me of what Keats said. It struck me what quality went to form a man of achievement, especially literature, and what Shakespeare possessed so enormously. I mean, negative capability, that is, when a man is capable of being in uncertainties, mysteries, doubts, without any irritable reaching after fact and reason. So the reason I brought this up, and I'm not very eloquent today, my apologies, but the reason I brought this up is that anything can happen. All predictions are about the future. A lot of stuff can happen between now and then, right? So if you're willing to accept that, okay, and like Douglas once said, if there's any animosity once you get into a trade, you obviously haven't fully accepted the risk. Well, obviously, with the amount of F-bombs I drop, I haven't fully accepted the risk a lot of times. So here's my F-bomb here. I'm not going to drop it anymore because it's I'm going to drop it from small height. It's pretty substantial. But anyway, so I know it sounds a little counterintuitive to be negative, but you're not being negative. You're just accepting the fact that something bad can and often will happen in this business. All right, number 22, review your process sheet on every trade. This is something, again, I'm always working on these different things, but this was probably right after I did my morning pages, if I had to guess. And I would encourage you to create your own, obviously, but I think this was a good start. Exercise, diet, pretty good on the exercise, okay on the diet, probably not the best, okay. Rest and relaxation, I'm so there. I do have hobbies, and I do really get into hobbies and obsessive hobbies and stuff, so that's good. But you want to be at your best, okay? Make sure you get some rest, get to bed early, wake up early, do your morning time, do your morning pages, have that quiet in the morning. The dog has interrupted me a little bit, and I did a whole segment just on disruptors, okay? And it could be something as simple as you get a new puppy and all of a sudden your morning time is screwed up, okay? And that could throw your whole day off. And you got to be really careful about that. Just stupid stuff like I got to the gym 5 minutes early this morning, and first thing I did was I cut my finger. Kind of a long story endless. And the gym didn't have any band-aids. Was unmanned today. And the lady that I know in there, she was kind enough to give me one out of a car. But I found myself just so pissed off, I'm bleeding like a stuck pig. I'm like, screw this workout. I'm just gonna go home. And I had to kind of take a deep breath and say, wait a minute, don't let this throw your whole day off. So that's what all your morning stuff does for you. It puts you in the proper mindset to face the day. And I would encourage you to stay analog as much as possible. And as I've said before, there was a book by a guy named Quick. I haven't finished it. I don't want to pick on the guy, but one of the things I don't like is he's spending a lot of time telling you what he's going to tell you. And I hate when somebody does that. And if I ever do that too much, at least, please call me on it. It drives my wife nuts when she reads a book like that, which is a short trip. She'll throw it against the wall, literally. I had another book. I have to find it. It looked like it had a lot of promise, and I was 56 pages in, and he was still telling me what he's going to tell me. Just freaking tell me, please. Now, on a positive standpoint, I do think Mr. Quick's book is probably of use. The book is named Limitless. And one thing he pointed out, and I need to dig it out and get the exact stats. I have it on audio, I think, on that one. I don't have the paper copy. But the point he was making is that we're bombarded with more information in one day than people years ago were bombarded in a lifetime, okay? And then the numbers are still pretty staggering if you go back like 30 years or so, or 40 years. So on an evolutionary standpoint, our brains are not equipped to deal with that. So that's something you got to think about. And as I've admitted before, I've never been tested for them. I know I have it. I have a little ADD. You probably see it in these presentations. You know, squirrel. Uh, my neighbor walks over every night and says that uh, just to mess with my head. But the all this information you're inundated with is not good for your brain. Okay, so at the least, get up early, exercise. And I know you think on big days tell me exercise. Look, I rarely miss a day off at the gym because I know myself. If I miss a day, I'm going to miss two, going to miss a week, going to miss 3 weeks, and then I'm done. So I just go every day. And people are like, you're so disciplined in the gym. I'm like, no, I'm not. You don't know me. The reason I'm here is because I'm not disciplined. Anyway, so you want to pick the best trades, obviously. Pick the best, leave the rest. I know it's cliche, but it's very, very true. One thing I like to do is like, especially because I have a trading service, okay? If I pick a stock and I put in a trading service, I have to fully justify why I picked that stock because there's a good chance that it could fail miserably, right? There's always a chance it could fail miserably. And at the least, I want to feel confident enough to where I thought this was the best, okay? And I thought it was worth a shot. And you have to acknowledge, accept, and ignore, okay, extraneous influences. So maybe I'm in a bad mood because the dog didn't let me get my work done, or because I cut my finger right before I got to the gym and couldn't find a Band-Aid, or whatever, you know, or maybe I need money going into a trade. And is it, to quote Sakota, is it intuition that I think this chart pattern looks fantastic, or is it into wishing because I need money? Okay. Now, ideally, you want to see what it is from a detached standpoint. Okay. Now, you might not have someone around that you can do this with, but just kind of do it out loud because I don't have anyone around me. I mean, of course, I could do it in the forum, which I've done before, but like if I'm thinking about a trade intraday or something, I need to talk about it. I need to kind of sell it to myself out loud, but kind of take a standpoint where if you had to defend your position, especially if it failed miserably, that's kind of getting back to that negative visualization where it's like, I'm going to take this trade, and we talked about this. And one thing with the negative, just to back up a second on the negative visualization, one thing poking around the internet a little bit, I noticed they talked about a pre-mortem, and I didn't know that that was an actual word. I thought I invented that word. You know, it's crazy. You think you invent something, and then you realize that somebody else has already coined the phrase or invented it. But the pre-mortem is you're kind of looking at it like you're looking at it in hindsight, like what would happen if it failed miserably. It kind of dovetails in nicely with that negative visualization. And I forget which number it was, but go in and look at my watch list under trading quick clips on YouTube and see which one that was where I had the do a pre-mortem every trade and flesh that out. Now, you might be wrong, okay? Negative visualization once again, okay? Accept the fact that you are discounting the future, okay? As I've shown many times, it's like you see this beautiful little setup, a little TKO type of setup, or a pullback to the moving average, the Landry pullback, or whatever. And it's accelerating higher, it's persisting higher. It's just a beautiful setup, okay? The moment you place a trade, everything from here that way, okay, is completely known. Everything from here that way is completely unknown. And again, not to beat the dead horse, but a lot of shit can happen between now and then. Now, we haven't taken the trade yet, so you want to obviously plan the trade and trade the plan. That's cliche, but you have to do it. Now, where's your protective stop? Where's your trailing stop? Or you're going to use a little bit of discretion, like if it just barely triggers and comes back in, like the CCL, are you going to take the trade or not? If you know where your entry is and your protective stop, then your initial profit target is just a mathematical calculation. Now, here's the hard part. Again, like I said, life and trading is making decisions and living with them. So that's the hard part, is living with your decisions. Now, as I said 1,000 times, and I call this foresight and hindsight. So let's say you take a trade, it fails miserably. How many of us, and raise your hand, and I know everybody here should probably raise their hand, right? But how many of us have taken a trade and when we stop at a loss, drop an F-bomb, right? Which is okay. And then say, I knew I shouldn't have taken that trade. Well, if you knew you shouldn't have taken that trade, and I'm guilty, believe me, why did you take it? Okay, so that's where the pre-mortem kind of comes in. Okay, if it fails miserably in the negative visualization, okay, negative capability, that all these things come in, it's like, okay, you don't want to end up in that foresight and hindsight situation because you knew if you ever lose on a trade and say, I knew I should have taken it, then obviously you shouldn't have taken it. Okay. Now, don't tell yourself that if you really thought it was a good setup. If you look back to your trading journal or whatever, or your plan and you had it all planned out and it all looked good, then don't beat yourself up. Again, shit happens. I guess that'll be the title of this video. So here's you're gonna live with your decisions, document the outcome. Okay. So if it's a positive outcome, was it because of skill? Was the setup? And believe me, it does take a little while to separate skill from luck or luck from skill, but it can be done. And Andy Duke talks a lot about that. Brian said that's never happened to me. Smiley face. With you on that, Brian. But Andy Duke talks a lot about luck from skill, and bad poker players, which could also be traders, when they lose, they blame it on bad luck. Okay. And when they win, they always claim it was skill when a lot of times maybe they just got lucky. Okay. And who's the Phil? Always forget his name. It's one of the Phils. It's the black Phil, not the white Phil. But anyway, the black Phil is more of that negative visualization and kind of introspective from a little bit of a negative standpoint. Like, oh man, that third hand and that fourth game, boy, I really blew that, even though he won the whole tournament. Whereas the other Phil H, is, yeah, hey, my God, look at me. But you really have to work hard to separate the luck from skill. And getting back to I knew I should have taken that trade. I think the point of true enlightenment, or at least one of the aspects, is when you're looking at a trade and you made money on it and you say, boy, I sure got lucky on that one. What was I thinking? That's okay. Okay. If you think I just got lucky and made money, you're okay. All right. But if it truly was skill, then congratulations. If you got lucky, especially if you're not willing to admit that you got lucky, you think it's just skill, okay, then be better. Andy Duke's book was Thinking in Bets, which was a good one. Now, let's say you have a negative outcome, okay? I don't know where this was going here, okay? Did you pick the best and leave the rest? I think that's what I was saying. Okay, yeah. Did you do all these things? Okay, did you pick the best and everything back here? Did you do all these things? Yes. Okay. Well, shit happens. All right. Sometimes twice, as I said before. No, then shame. Just be better next time. Okay. Trading is like you have to beat yourself up an ample amount. Okay. If you don't beat yourself up, you can eventually blow up because you just kind of continue without any discipline. Okay. And if you beat yourself too much, you're going to cripple yourself and never make another trade. Now, this one sounds a little self-serving, but I think what you need to do is start your own. So number 23, watch the Million Little Things series and start your own. And one of you guys in here said, I can't wait till you make a list of these things. And that'd be great. That's a great idea. So I made a playlist on YouTube, youtube.com/Dave Landry, and there's a playlist. And we're going to get back to the series over the next few weeks, likely. And as I've said 1,000 times, everybody thinks the switch is going to flip like bam, and all of a sudden, hey, I'm a trader now, right? Well, that's not how it works, Beatrice. That's not how any of this works, right? It's actually a million little things. And I'm just kind of looking at these again for the first time in a while, if that's a saying. It's like seeing them for the first time. And I think I need a few of these. I need to rewatch a few of these myself. But like right here, okay, this is kind of the thing we've been talking about with the resolutions all this time for the last several months. Take the trade failed miserably test, okay? I should say take that, so I need to fix that. But okay, so if this trade failed miserably that you're getting ready to take, it looks so damn good that you'd be stupid not to take it, okay? So just it's just tiny, tiny little things, and I would encourage you to start your room. And this series has really been a godsend for me. It made me realize how many little things and how hard trading can be if you're not really, really on top of these little things. And a few days ago, with the market, I've been trying to back off, trying to not get sucked into the flickering ticks over here. But it's been so crazy lately. I've been stepping in small size, doing a few little things. And it was yesterday or day before, it was day before. I put in, just small size, some ETFs here and there, and everything worked swimmingly. And then I got a fill while I was at lunch on another one, okay? And I kind of forgot about that one. So all the money I made because I was at lunch and I wasn't in here to come, it's like, oh, I'll put in a stop later or whatever. I should have put the fork down, hid the plate from the dog, came in here, and placed a trade. But I end up losing. I haven't added up. I don't want to add it up. But I think I lost more on that one trade because I wasn't paying attention than I did on all the other ones combined. It was like 4 or 5 trades. They were all doing swimmingly, doing great. I was feeling pretty good. So yeah, let's go eat, And that one damn trade. So it's kind of like, you could do fantastic, but if you screw up on one trade, it could erase a lot of other trades. So you really, really have to be on top of your game in this game. But again, I'm not being vain. I think you should start your own. So this has been really a godsend for me, just being cognizant of all these things. All right, number 24, avoid just this once trades, okay? And it's second cousin, but it was working so well, But to stay focused on this, a lot of times you're kind of thinking like, well, just this once I'm going to take this trade, okay? Now, knowing what to do is fairly easy after you have a little bit of experience, right? And it doesn't take a lot of experience, believe it or not. If you take, it doesn't have to be my pattern, but since I'm talking, take like Landry pullbacks and study those. Find 100 examples through a variety of conditions. Find some that works, some that didn't. Find beautiful setups that failed miserably. Okay, there's that negative thing again, right? But it can be a positive in the long term. And get a feel for it, and just focus on that until you're successful at that, and then move on. You're welcome. My work is done. Where's a mic? I need a fake mic to drop. I've broken mics by dropping them. But anyway, knowing what to do is fairly easy, especially with a little experience. And if you don't know what to do, ask yourself, if I knew what to do, what would that be? Now, just this once trade, and believe me, I'm guilty, okay? So a lot of these webinars are admission of guilt. But it reminds me of acrasia, which I've talked about quite a bit. And it's a state of mind in which someone acts against their better judgment through the weakness of will. Amen. Okay. It's kind of like I'm not going to drink tonight. Well, I think I might just have one beer, Now, acrasia is a state of acting against your better judgment. It is when you do one thing, even though you know you should do something else. Amen. Okay. How many times have I said, and I think I first put this in layman's, you know what you're doing wrong? You know what you're doing wrong, okay? Acrasia is what prevents you from following through on what you set out to do. Well, along those lines, just a random thought here, discipline gets used up, okay? And that's why I have to work out not first thing in the morning, but before I come to work, okay? There's been many a days where I'm like, you know what, I'm going to work out later, okay? I'm busy today, I'm going to work out later. Well, before you know, it's like noon. It's like, well, let me just eat lunch, and then, I better let that lunch go down. And then the market closes, and then it's kind of like, by then it's like, it's too late, or whatever. I've got my nighttime analysis to do, my nightly analysis to do. got to get that service published, blah, blah, blah. So you never get around to doing it. Well, that discipline just gets used up. And a side note here about discipline getting used up, that's why you want to be careful. And believe me, I'm guilty. You know, I've got all these screens that are flickering all day long, and it's like I'm very tempted to go in and make these extra trades. So that's kind of eating away at my discipline, so to speak. Now, time and consistency means that you want that immediate gratification versus the long-term goal, okay? And in our society, that's tough, okay? Because we live in this so-called microwave society. A blockbuster video is out of business, okay? Why? Well, because people could just get a movie much more quickly off the streaming services or whatever, you know? Now, a tangible immediate gratification is tangible and rewarding, but it does come with a long-term cost. You eating bad foods, or if you go do something more fun than going to the gym, right? You get that immediate dopamine hit, or however you want to look at it, but it does come with a long-term cost, obviously. Now, I always get this one mixed up, so I had to Google it one more time. I don't know if it's Thinking Fast and Slow. It's in a lot of these behavioral science type of books. But we have this time and consistency where, like, if somebody offered you $500 today or $505 tomorrow, most people would take $500 today. Now, if somebody offered you $500 a year from now, or $505 a year and a day from now, most people would take the $505. It's still the time is the same. It's one day, $5, but the way people look at it, it's much differently. I would take the $500 today, probably. Now, again, kind of dovetailing back to the microwave society, modern pressure. We're all looking for instant success. Nobody has any patience anymore. It's like we all want everything to load quickly, to happen quickly. And all of this, I think all this bombarding with all this other things is making our brains stupider. And it's making us, it's creating ADD and creating all these other problems, which lead to this acrasia and time and consistency. And you know, these easy money gurus aren't helping. And this is an old slide that I found while working on this presentation. I was digging through old slides trying to find acrasia. And it seems like lately there's a new it's weird. It's like they went through a cycle. There was these, I was just getting inundated with these ads, and this firm got sued by the government for 120 something million dollars or whatever. And it seemed like that kind of put the lid on these guys for a while. It was kind of nice. And then all of a sudden they're back with a vengeance. So, and then I also click on them just to I purposely want to see them come up in my YouTube feed so I could see what these people are doing. And it's amazing. And how they're not in prison is also amazing. I know I kind of went off on off the rails there. Any questions or thoughts on all that? All right, let's shift gear, go to crypto, and then we'll hop into which I guess is kind of going to be the elephant in the room, stocks, right? Let's hop over here. Okay. So crypto, as I've said quite a bit, the crypto seems to have this several week or several month bull bear cycle, which if you're learning how to trade, believe it or not, as I've said before, I'd recommend you trade crypto just because it's like a hyper speed, or what is it, ludicrous speed? We've gone plaid, you know, ludicrous speed. The amount, the way these markets move over and over again through the bull and bear cycles. And that's why you're going to have to use money management. You're going to have to be prudent in your trading. So here's Bitcoin, the Mac Daddy of them all. Bitcoin's looking pretty ugly, okay? It's very toppy, sideways at best. Lots of Landry light. We went up to touch that moving average, roll right back over. and now we're testing the moving average again. For now, Bitcoin looks like it's in trouble, okay? Ethereum has been abysmal forever. I don't know if I can take these lines out. But you could see one point that I often make to a point of ad nauseum is never buy a market below the 200-day, I'm sorry, the 30 EMA, okay? And you can see that would keep you out of a lot of trouble. And as we look at these shitcoins, you'll see that it really does help. And here's another example. Look at this. Look at the Landry light. Okay, we had one bar above the 30 EMA and the rest were below. And this market has imploded. This is Ethereum versus Bitcoin, okay? An RS type of chart there. So if we look at sometimes you can just go in here and look at the percent change and buy the stronger ones. This one's kind of dead cat bounce looking. I wouldn't rush out and buy that. But if they're banging out some new highs and starting to clear some recent resistance and stuff, then it might be worth a shot, okay? So let's just take a look at a few of these. I doubt we'll see anything today. Okay, anybody want to take a look at any pairs or anything? I mean, there's possibly one in here. Like this one's kind of waking up. Maybe if it can get through some of this overhead supply, this might become interesting. But the point I was making with the buying the new highs, if you look at some of the buys that I do, and go back if you can stand it, go back and look at the old weekly charts. Like this initial IP, I bought this breakout back here. Now I'm not a breakout trader, but in crypto, because when crypto's in a bull market, which is get ready, it's going to happen in about 3 weeks probably, you can go in and buy these stronger ones. Okay, any pairs you guys want to take a look at? Going once, going twice, and then we'll shift gears and get to stocks. All right. All right, let's take a look at stocks. Again, I'm such a nerd. It's gonna be fun to do it in real time, huh? Okay, so S&P 500, aka the P's. Stole that from a broker I had 25 years ago. He said, I see you still stole my line. Yep, every day. S&P 500, bow tie to the downside. That is not pretty. Or as we say south of the border, no bueno, huh? So we're down hard today, 1.5%. Futures 92, so a little bit of a bounce. I wouldn't rush out and buy them just yet. Don't catch that falling knife. But anyway, so this is ugly. We've broken down below the range, and it's always bad when a market breaks out to all-time highs from a range and then takes out the bottom of its range, okay? So everybody who held from here to here is now a hurting pup, okay? Just think about the psychology of the market. If you don't walk away with anything today, if I get hit by a beer truck tonight or tomorrow, whatever, I finally leave the house, then think about what the psychology of the market is. And right now, it's probably not too good. But longer term, we haven't got enough sell signal just yet. Shorter term, yeah, we've got bow tie sell signals and many other shorter term things. NASDAQ composite looking as bad or worse than the P's. Look at that, down 390 points. Wow, 2% and change. You can see we came up here, all-time highs, and then we just topped out for a while. Top and chopped, okay, and then rolled over. We're very oversold in here, remain oversold, so I wouldn't rush out and buy the market just yet. Let's take a look at the VIX real quick. Where's my VIX research? Just right here. We'll take a look at the VIX. Damn, I didn't save my, I forgot to save everything. So the VIX is stretched. It's not as stretched as it was, but it's stretched from the 10-day simple, 26%. Anything 10% or more, keep an eye out for reversal. So we're at 20-something%. If the market continues to slide, then this could get really spiky in here. Be careful trading this VIX type of stuff, but it can be worthwhile, especially if you're doing something intraday. I would not hold overnight if you're making a VIX-based trade. I used to years ago, but not anymore. All right, getting back to the overall market. See if we get a spike like that, then you can carefully get in, but be super careful. Let's take a look at the Rusty. Russell 2000, same as it ever was, just ugly, just really, really ugly. You can see it's at its multi-month lows. Let's take a look at a weekly here. Yeah, that's pretty ugly on a weekly basis. Wow, look at that, kind of a double top looking, and just flat out ugly. So that is no bueno. A lot of these areas that tried to make new highs have come all the way back in. That's no big shocker like the market itself. Again, that's not a good thing when that happens. There's cybersecurity. You can see it broke out, came all the way back in. It hasn't broken down below the bottom of its range, but it's ugly nonetheless. EFA shares have been doing pretty good, and usually United States is the dog with least fleas when the markets begin to tumble a little bit. But right now, we're the dog with fleas, I guess. But as I said recently, I think in the service, I think that as we tumble a little bit, these EFA shares are going to start imploding a bit. We just looked at Bitcoin. Now, there are a few areas that have done okay as of late. Unfortunately, these are mostly defensive in nature, such as major drugs. I'll just punch them in. So you can see major drugs, kind of nice bottoming type of action, bow tie. I prefer if this was coming off of like major lows, but you can't argue with the fact that major drugs have been headed higher. There's a few other areas like health services that have been doing okay, kind of bottoming out. But again, these are defensive areas. Foods have been doing okay as of late for the most part, but that's a defensive area. Kind of hard to get excited about just those few areas rallying. Not that we might not take not that we won't take a trade in those areas, but just not a whole lot to get excited about. Where's my foods? Speaking of foods, my stomach is growling. Maybe it's a good thing I ate that sausage on the way in here. Let's see. Oh, here's food and beverage. Here we go. You can see foods again. Another one of these defensive type of areas that are doing okay. Now back to the downside. Take a look at like the transports, not so hot. Take a look at jets, which had been doing really well. Look at the bow tie here, okay? And then the trigger would be, depends on if you take a higher low trigger or a higher low slash also a 1 bar pullback trade. So that the entry would have been right around there. So that's fairly ugly. That's not looking good. Banks haven't been doing so hot. There's regionals. You can see banging out new lows with a bit of vigor. Mags, it was cool. Mags for a while. They were the prior leaders, and then they were the new leaders once again, and now stick a fork in them at least for now. They're done. Let's take a look at a couple other areas in here. It's not pretty, so there's really nothing to get too excited about. But let's take a look at the semiconductors. Semiconductors, bit of a bummer. We had that gap down on that AI. I think it was a BS announcement, but hey, it is what it is, right? If the market drops 10%, who cares what caused it, right? Or what is attributed to it, to the slide. By the way, if you have any individual stocks you want me to look at, please start typing them in now, okay? Anyway, we all but closed that gap, and I was pretty excited about the semis coming back. I wasn't going to rush out and buy them, as I've preached ad nauseum, unless they started banging out some new highs. But I was very encouraged that we closed the gap. Unfortunately, we rolled right back over. And right now, we're right here at multi-month lows. Okay, so stock market looking pretty ugly. Let's take a look at bonds. And we'll take a look at gold, and then I'll wrap this up. Again, if you have any stock picks, please let me know now. Bonds look like they're trying to bottom out. Thank God, right? At least something might be trying to bottom. So that would be a good thing. Obviously, if bonds bottom out, that means that rates are coming down. Gold, the commodity, has been doing really well. One of the few areas that's doing good. You can see we're not too far from these brand new highs, and gold stocks have been waking up a little bit too, today notwithstanding. And that's why you saw that gold stock as a mystery chart. And I've been keeping an eye out for gold stocks to see if there's anything worth trading. All right, any individual stock picks you want to take a look at? Going once, going twice. Well, I want to thank everybody for attending. Again, 11-ish, maybe 12 Central or 1 p.m. Eastern. somewhere around that time. So keep an eye out for that. On Thursdays, we're going to try to go back to the day for a while and see what happens. Of course, the market's getting kind of crazy again, and I'm might be wanting to watch the market. So we'll see how that works out. But this actually might keep me out of additional troubles from a selfish standpoint. Anyway, I want to thank everybody for attending. I appreciate you taking time again out of your busy schedule. Anything unanswered, Landry.com. Everybody have a great weekend. I'll see most of you guys and girls, I would guess, in Facebook over the next few days. Everybody else, have a great weekend. I'll see you again next week. And may the trend be with you. Thank you so much. You're welcome.